Jamie, thank you very much for joining us today. How are things in Toronto?
Excellent. Snowy and chilly outside, as is appropriate for this time of year.
So, Jamie, Agnico is the third largest gold producer in the world with 11 producing mines globally. But in the interest of time, I just want to highlight or touch on a couple of your larger ones, Detour and Malartic. And I want to start with Detour. It's Canada's largest producing gold mine. Average annual gold production is around 708,000 ounces. It has 19.7 million ounces of reserves. So this thing is massive. But you and your team have put forth a plan to increase production from 700,000 ounces to 1 million ounces. Maybe you can just touch on that and tell us how you're going to do that.
Yeah, that's exactly right. So we published a study update that really showcases the potential of Detour. So what we're envisioning is going underground and displacing lower grade zero point 0.9 gram per ton material with over 2 gram per ton material. So the idea is that we'd ramp access the higher grade component of the underground resource and extract about 11,000 tons per day from underground and couple that with the 70,000 tons per day that we're getting from the open pit. So you put it all together, it gets us up to about 1 million ounces a year. And based on the study, we stay at 1 million ounces a year for about 14 years. And it's, the potential of this asset is tremendous. The cost profile stays about the same. In fact, actually declines a bit. At a $2,300 gold price in those years that we're producing 1 million ounces a year, we're generating $1 billion a year of cash flow. So that's at $2,300 gold, obviously even higher at current prices. So it's a tremendous asset with great growth and exploration potential.
And what's the timeline associated with this plan? When will you get to 1 million ounces?
Yeah, so we're taking a very slow and steady approach to development. So what we published and announced in June was that over the course of the next 3 years, we'll be investing about $100 million. The idea is to get access underground, do some infill drilling, do some expansion drilling, conduct some bulk samples just to confirm grade continuity, make sure we understand the mineralization. So by 2027, we'd be in a position to pull the trigger on a full construction decision and start aggressively working through developing the mine underground. So that's the plan. The majority of that underground infrastructure will be complete by 2029, and then we expect to be at that 1 million ounce per year level by 2030. Again, with the potential to produce at 1 million ounces a year for 14 years. But the one thing that I always remind investors is that the study that we published, it was based on resources as at the end of 2023 that had a drill database cutoff of October 2023. So the underground resource at that time was 8 million ounces. Only 50% or 4 million ounces were actually included in the study. So, since that drill database cutoff, we've done a year and a quarter of drilling. We've added certainly to the resource base, and through some of the infill drilling that we've completed and that we will do, we think we'll be able to improve the mine plan even further. So I think that million ounce a year for 14 years, that's going to grow, and Detour will be at that 1 million ounce per year level for potentially decades.
And what's the current mine life?
So the current mine life is actually out to 2052, based only on reserves. So you referenced it. We've got almost 20 million ounces in reserves at Detour. If you factor in resources, there's another 20 million ounces. So, if you add the reserves and resources together, this mine will be going for decades and decades.
Yeah, huge upside. So let's talk about your second largest mine, and that's Malartic, and it's also Canada's second largest gold mine. Expected production in 2024 is 630,000 ounces. It has 7.9 million ounces of reserves. And a big part of the Malartic story is one of growth associated with Odyssey. And you're currently transitioning from an open pit mine, which is what Malartic is, to an underground mine, which is what Odyssey is. Maybe you can just tell us how that whole transition plan is moving along.
Absolutely. So yeah, you're absolutely right. Up until a couple of years ago, Canadian Malartic was actually the largest open pit gold mine, and that title was overtaken by Detour. But Canadian Malartic will be transitioning from open pit, where we've been mining and milling at a rate of about 60,000 tons per day, at a relatively low grade of about 1 gram per ton. So that's historically what the operation's been running at. Between now and 2028, we'll be transitioning to underground mining at Odyssey at a rate of about 20,000 tons per day, but a grade that's 3 times the open pit grade. So we've got a third of the throughput, but 3 times the grade. What that means is that gold production stays effectively flat in around the 600,000 ounce per year level. But all of a sudden, we've got 40,000 tons of excess capacity. So that's a great problem to have. We'll be able to sustain production levels where they are, with tremendous optionality associated with that excess capacity.
There must be a good internal battle going on with the miners at Detour and the miners at Malartic about who's going to be the largest gold producer in Canada.
Absolutely, it's there's a race to 1 million ounces there for sure, and the Detour study in 2024 really showcased the potential of that asset, and some of what we've done more recently and what we'll work on this year will show a pathway to 1 million ounces of production at Canadian Malartic. We have a strategy that we call fill the mill. And that's filling that excess 40,000 tons of capacity. There's a few ways that we can do that. You might have seen we announced the acquisition of O3 Mining back in December before the holidays. And in so doing, with their Marban deposit, we see the potential to develop that as an open pit and feed about 15,000 tons per day to the Malartic mill. So that will help certainly fill part of the mill. Given the size and scale of the deposit underground at Odyssey, I mean, we've gone from, if you factor in reserves and resources, 0 to 16 million ounces over the course of the past 7 or 8 years, and growing. I mean, there's tremendous exploration potential and upside here. So we also see the potential for a second shaft. The first shaft underground project will give us that 20,000 tons per day. We could potentially see a second production shaft that would give us another 10,000 tons per day. So you put those three together, the first shaft, second shaft, and feeding 15,000 tons per day from the Marban deposit, and we're at about 1 million ounces a year. Beyond that, we have another satellite project called Wasamac. It's about 55 kilometers away. That's another project that has the potential to provide 3,000 to 4,000 tons per day of higher grade, 2.5 gram per ton material to the mill. So there's, as I said, a lot of optionality associated with that excess capacity. We actually have a plan between now and the early part of the next decade to fill the majority of that mill and get production from the Canadian Malartic Complex up to north of 1 million ounces a year.
And you made mention of the shaft that's currently being constructed. How is that going?
Going very well. So I'd say we're about 2/3 of the way through that overall project, including all the site infrastructure associated with it. The shaft is down to a depth of over 900 meters. The project's progressing well. And again, that will support that transition from open pit to fully underground by the end of 2028, early 2029.
Jamie, another growth component of Agnico's growth strategy is growing the operations in Canada's north, and this includes Hope Bay, Meadowbank, and also Millodine. Maybe you can just tell us how those mines are performing.
Certainly. So we've got two operating mines currently in Nunavut, the Meadowbank Complex and Meliadine. And 2024 was really a record year for both of those operations. A very strong focus on cost control and continuous improvement there. We've been hitting kind of quarterly operating and production records throughout the year, and will have achieved production of almost 900,000 ounces in Nunavut from those two operations this year, and generated cash flow well north of $750 million between the two of them. So it's been an excellent year in terms of operations in Nunavut. Now, Meadowbank has a mine life out to about 2028 currently. However, we do see the potential to extend that, though at a lower production rate, longer, potentially into the 2030s, again, depending on gold price. But the growth in our Nunavut platform is expected to come from our Hope Bay project. So Hope Bay was acquired from TMAC Resources back in 2021. You'll recall the Canadian government blocked the sale of that asset to a Chinese company at the time, and Agnico acquired it for about $280 million. The idea, the development scenario under TMAC was to operate it at a smaller scale. Agnico made the decision to shut it down and focus on exploration and really build up a critical mass in terms of mineable resource. And that's been the focus over the past several years. Given Agnico Eagle's experience mining in the north, we know that you need scale. You need to be at around 350, 400,000 ounces a year for an operation to really cover the fixed costs and generate strong returns and strong margins. So that was the target at Hope Bay, to see if we could get the mineable resources up to a point where it would support that kind of operation where we'd be producing at those levels for a decade. And 2024 was a great year. We had this discovery in this Patch 7 zone of the proximate to the Madrid part of the deposit. And we've found higher grades and thicknesses that are amenable to mining kind of larger stopes. So we're excited. We think that's going to represent another mining front for us and potentially help push that project beyond that 400,000 ounce per year threshold that we've been trying to achieve. So we'll be providing updates on Hope Bay throughout the course of this year. And we're working on a study that would support a redevelopment of Hope Bay, hopefully have that completed by the end of this year, early part of next year.
So I want to move on and discuss your balance sheet. And Agnico is producing a lot of free cash flow. And how will you allocate this cash flow in the coming year? Will you pay down debt? Will you pay dividends or implement buybacks?
Yeah, so we are in the very fortunate position right now that we can do a little bit of everything. We've done a great job through 2024 in terms of keeping a lid on costs. I always quote, the gold price went from $2,000 an ounce to $2,800 an ounce through 2024, a 40% increase. Our costs were up 3% year over year. So we've been able to deliver that margin expansion that investors in a gold mining company like Agnico would expect when prices are rising. So if you look in 2024, we paid a dividend about $800 million US. We bought back up until the end of the third quarter. We bought back another $120 million in shares. So, if you round up almost $1 billion US of direct shareholder returns. In addition to that, we've substantially improved our financial position and strengthened our balance sheet. We went from $1.5 billion of net debt at the start of the year to approaching break even by the end of the year. So, between direct shareholder returns, the dividend and share repurchases, and what I like to call indirect shareholder returns, because we're strengthening the balance sheet, it was over $2.3 billion that went again directly or indirectly to shareholders in 2024. 2025 will be much of the same. We do have a significant tax bill in 2025. We are generating strong profits in Canada and will be paying more in taxes than we did in 2024, but we still expect to generate very strong free cash flow. We still expect to be able to pay a high dividend, buy back stock, and reinvest in the business. We're looking at increasing our capital spending and increasing our investment in exploration. So again, these gold prices, fortunate to be able to do a little bit of everything.
The government always has to get their cut.
They sure do. It's a certainty in life.
So you just touched on exploration. What is your budget?
So our budget for 2024 was around $300 million. And I'd expect, we haven't released formal guidance with respect to 2025 yet, but I expect it'll be a bit higher than that, especially when you factor in some of the spending on, for example, Detour Underground. A lot of that infill and expansion drilling that we're doing, the pace of that will be accelerated. We also put out a study in July of 2024 on our Upper Beaver project in Kirkland Lake. and we'll be spending doing additional drilling on that as well. So you expect an expanded exploration budget in 2025.
So Agnico has done a very good job of creating value through the drill bit, but also by way of acquisition. You touched on earlier that you're in the process of acquiring O3 Mining, and you've acquired many small exploration companies and development companies over the years. But is this a strategy that Agnico is going to continue on with in the coming years?
Yeah, I'd say if you look back in Agnico's history, further back, the focus from an M&A perspective was more on earlier stage, smaller scale operations where Agnico could add value through the drill bit by ultimately developing and expanding mines. I'd say, over the past 3 or 4 years, the focus has been more on larger scale strategic M&A. So, for example, the merger with Kirkland Lake in 2022, the consolidation of 100% interest in Canadian Malartic in 2023. I mean, those really solidified Agnico's position in our key operating jurisdictions within Canada. So Ontario, Quebec, and I guess TMAC in Nunavut. So it set up the company extraordinarily well. I mean, our strategy is regional consolidation to create a competitive advantage. We believe that by being, the biggest employer in the region, by having the strongest supplier and First Nations and community relationships, that provides a tremendous competitive advantage that allows us to run our mines as efficiently as possible and keep our costs as low as possible. So I'd expect more of the same. I mean, O3 was a bit of a smaller transaction, but it's right down the middle of the fairway in terms of leveraging existing infrastructure to create a very high return for our shareholders. So expect that'll continue to be the focus going forward.
And it's just not Agnico that's been making sizable acquisitions here in the last few years. Newmont, for example, acquired Newcrest. But do you think this is going to be an ongoing trend within the industry?
Yeah, I
Yes.
think, I mean, M&A will certainly continue. There has been a lot of consolidation in the industry over the course of the past 10 to 15 years. You go back a decade or more, and that's all investment bankers would talk about is the need for consolidation amongst the intermediate or mid-tier producers. A lot of that's happened. And I think, Agnico Eagle's in the luxurious position now of not really needing to do anything. We've got 6 organic growth projects. If you factor in Shaft 1 at Odyssey, a potential Shaft 2, our Detour underground expansion, the Upper Beaver mine in Kirkland Lake, our San Nicolas project in Mexico, and Hope Bay in Nunavut. So there's a lot going on within the existing portfolio, which means we really don't need to do anything. And with long life mines like Detour and Canadian Malartic that are going to go at north of 1 million ounces for decades, it provides a really strong foundation for the company going forward. So we have again, the luxury of being able to be patient, not needing to do anything, and we can evaluate external opportunities against the 6 high return projects that we have within our own portfolio.
And Agnico has 11 producing mines. A few of them are quite small, but would you ever consider selling off some of the smaller producing mines to focus more on the larger ones like Detour and Lake Malartic?
Yeah, so I think our smaller operations all are unique and make sense within the portfolio for different reasons. If you look at our Mexican operations, we're really transitioning focus there to the San Nicolas joint venture that we have with Teck. Our La India mine was effectively closed last year. The Pinos Altos mine has a few years remaining, but we're dedicating a lot of our technical resources and management to the San Nicolas project, which we see as having a lot of potential. So that project in Mexico certainly remains core for Agnico. If you look at our Kittilä mine in Finland, that's an operation that is steady state currently producing about 220,000 ounces a year, generating almost $200 million a year in cash flow. And all of the infrastructure has been bought and paid for. So it's really paying a healthy dividend every year with no significant additional capital required. And there's the potential in Finland for that to become a bit of a regional hub. There's a lot of early stage exploration companies with interesting projects that are within a trucking distance of the Kittilä processing facility. So that's a potential consideration there. And if we think about our Fosterville mine in Australia, you'll recall Fosterville had the super ultra high grade Swan Zone, and for a period of time was one of the largest taxpayers in Australia, just given the level of production and cash flow that was generated from that operation. Well, there we're focused on exploring to try to find another Swan Zone. We think that there's a lot of remaining exploration upside there, and the mine's more than paying for itself. It's in 2024 generated on average $1 million a day of free cash flow. So it's supporting not only continued capital investment, but the exploration effort there, and still generating a dividend beyond that.
Agnico has a lot going for it right now. As you've already mentioned, you're generating millions of dollars of free cash flow. You're returning cash to shareholders in the form of dividends and also buybacks. The 75% of your production comes from Canada, one of the safest mining jurisdictions in the world. And I'm just kind of curious, with all these benefits or positives, are you getting a lot more calls from generalist investors?
We are absolutely starting to see more interest from the generalist investor, which is what we want. I mean, we talk about Agnico Eagle. It's a great company, not just a great gold company, and we're hitting some of the return metrics and kind of free cash flow yield thresholds that generalist investors would expect from a company in any industry. So I think we're becoming increasingly attractive to the generalist investor, and I think gold has a role to play in any investment portfolio. And frankly, it's a sector that's underinvested in currently by the generalist investors. So there's lots of opportunity and potential there. We are focusing our marketing efforts on trying to meet with new sources of capital, and trying to introduce the company to those that we haven't met with before. We've seen specialist resource funds really shrink in size over the past decade or so, and so I think for the industry we need to work to appeal and showcase the value creation potential in our companies to more generalist investors.
And when you said you're getting more interest from generalist investors, are they coming out of the US or Europe or where?
I'd say the combination of both. We are trying to get off the beaten path a little bit in terms of not just attending the same conferences and seeing the same faces, and going to different cities and meeting with high net worth individuals and family offices that perhaps we haven't met with before. But I'd say we're seeing an uptick in generalist investor interest across the board, whether it be in Europe or North America.
Jamie, as we wrap up, what can investors expect in terms of news flow in the coming months from Agnico?
Yeah, so I think the focus in 2025 will be more of the same. Quarterly updates on the 6 development projects that I referenced. I think there's going to be a lot of focus internally this year on the second shaft at Odyssey, and we'll be in a position to release something publicly on that hopefully around this time next year. Similarly, there's a lot of effort underway currently at Hope Bay to complete that study, and again around this time next year we'll be in a position to publish that. But as we work through the year, we're doing a lot of very exciting exploration work. We're investing significantly in expanding resources at our biggest projects, so we'll be able to provide updates on that. And I envision being able to continue to report strong production results and ensure that we continue to achieve our guidance with respect to costs and capital spending, so that we can ultimately deliver that free cash flow that the shareholders expect.
Well, Jamie, that was a great update, and I want to thank you very much for spending time with us today and sharing the Agnico story.
Thank you for having me.